Non-performing loans, which is defined as a loan either in default or close to being in default, rose to 10.7% in August from 9.9% in June, as effects of a slow economy, political uncertainty and poor weather are felt. This comes on the back of a marginal growth in credit to the private sector, which increased to 1.6% in August from 1.4% in July, reversing the downward trend since August 2015. Manufacturing, real estate and trade sector accounted for the largest proportions of bad loans book.
Manufacturing, actually, we have looked at this and we have seen that about 5 billion of this significantly, relates to a sugar company, two cement companies, and a plastics firm. In real estate, something like 3.9 billion. This relates primarily to two projects, one a golf course project and the other one a housing project. Again, similarly there, the bank and the concerned institutions are working to resolve that particular matter.
Both the national government and county governments may have added to the increase in bad loans in the trade.
Trade, something like 2.8 billion, and these are actually small and spread across many banks. But it's interesting that a lot of this relates to delayed payments by, let's say, government, both national and county governments, and as these payments get repaid or get paid, these numbers will look much better.
The governor also highlighted some of the things he expects from lenders in the post-capping of rates regime, while calling for more discipline in issuance of loans.
We are pushing banks to have to improve their lending practices. So, for instance, remember we talked about the business practices that and business models, the new business models that they were discussing with us. So that is important. So they have to be more business oriented rather than sort of being, let's say, less so. In particular, when they lend, they have to price risk. So it has to be risk-based lending.
As the economy faces an inconclusive electioneering period, the central bank remained optimistic about growth, even as Treasury cut its 2017 forecast to 5.5% from an initial 5.9%.
We don't see any likelihood of growth being, sort of the numbers that some of you have been putting out there, less than 5% and things like that.
The relative stability in the foreign exchange market, supported by a resilient tea and horticultural services, diaspora remittances and a strong recovery in the tourism sector, informs some of the bullish stance adopted by the central bank. As Q2 numbers come out towards the end of this month, we will have a clear picture of our economic growth going forward. Hudheifa Aden, NTV.